If you've been watching the Los Angeles market lately, it probably feels a little contradictory. One day you hear prices are slipping, the next day a good house down the street sells with multiple offers. Those are still a thing? So is LA cooling, correcting, or maybe even heating back up? The truth is, we're in a very particular kind of market, and if you own here or you're trying to buy, understanding this version of LA matters more than any national headline. I'm Keri White, real estate agent in beautiful Los Angeles, and on this channel, I share data-driven insights so you can make informed decisions whether you're buying, selling, or just keeping a close eye on the market. And if you find this useful, hit subscribe and pass it along to a savvy friend who's been watching the market. Okay, in this video, I'm going to walk you through where prices, days on market, and price per square foot actually are right now in LA, how the market feels on the ground, especially the split between single family homes and condos, and what this means if you're deciding whether to buy, sell, or maybe stay put the next year. Let's start with the big picture. Over the last few months, the median sale price in the city of Los Angeles has been sitting at about $1 million. Compared to the same period a year ago, that's roughly a 1 to 2% dip. Basically a modest give back rather than a big correction. And if you look back to 2020, we're still well above where we were then. So the story here is not a crash, it's a market that's cooled from the frenzy, trimmed some of the peak pricing, but kept pretty much all of its gains. On a price per square foot basis, recent sales across LA are averaging roughly $634 per square foot. That's a bit off the highs, but still significantly higher than 5+ years ago. And again, you see the same patterns, small movements year over year on top of much larger run-up over time. So let's talk about days on market. Let's get a feel for that pace. Right now, homes in Los Angeles are taking about 50 days on average to go into escrow. 50 days can feel like a shock to a lot of sellers. And most buyers after 2 weeks are like, what's wrong with that house? But these are the averages. And you compare that to 2021, when well-priced homes would sell in 7 or 14 days. Now you can see how much breathing room buyers have actually gained. So yes, the market has slowed, but it's compared to the frenzy, and it's still very much moving. Buyers can actually see a property, think about it, actually sleep on it, do inspections, write a thoughtful offer, instead of sprinting on day one. Where it gets interesting is when you separate the single family homes from the condos and the townhomes, because condos are such a big part of LA for affordability. So single family homes are still the pace setters. Most detached homes across the city are trading above $1 million, even though $1 million is the average. But this is really just talking about the city of LA. If you're specifically looking on the west side, from Beverly Hills to Santa Monica to the South Bay, your average pricing is going to be closer to $3 million for a single family home. When homes are priced in line with the recent data and presented well, they will see strong interest, and in some cases, most cases, multiple offers. This is especially true in these desirable pockets on the west side and other in-demand neighborhoods where lifestyles and schools are the ones driving decisions. Condos and townhomes tell a pretty tempered story. Recent city data has the median sale price right around $699,000. So condos sit well below the $1 million citywide median for all property types and often show a higher price per foot but a lower total purchase price, which is exactly what makes them attractive to many buyers who want to be in LA but don't want to pay a 7-figure price tag. The trade-off is really time and leverage. Condos and attached product typically take longer to sell than a well-positioned single-family home, especially in buildings or areas where there are several similar units on the market at once, which you see a lot of in these bigger complexes. So that's where buyers are often having more room to negotiate on price, credits, or terms. On the ground, that translates into a very segmented feel. Well-priced, move-in ready homes in good condition, they get a lot of attention. Properties that need work are priced optimistically or blend in with the competition. They tend to sit, and then you see price adjustments. Overall, it's a choosier market, I would say. Buyers are looking carefully at condition, monthly payments, and long-term fit, not just, can I get anything at all? And that's the key word here, choosier market. Even when options are still limited, choosy is the thing. Now, we can't talk about this market without talking about interest rates. As of early June 2026, the average 30-year fixed rate is sitting in the mid 6% range, roughly 6.4 to 6.6, depending on the day and the lender. Rates never used to move like this. And that's an improvement from some of the peaks we saw when rates first jumped to almost like 8% in 2022, but it's still more than double the 3% mortgages a lot of owners locked in back in 2020 and 2021. This gap is the main reason why so many people feel frozen. They have equity, they have strong incomes, but moving often means trading a mortgage that starts with a 3 for one that starts for a 6. And that jump in monthly payment, it's significant. On a $1 million purchase, that's double what you would have been paying. Think $3K a month to $6K a month, plus taxes, insurance, home maintenance costs. Sometimes renting has been the best option for first-time buyers. So instead of seeing a flood of listings, we see a slow drip as owners decide that a lifestyle change, a growing family, a move closer to work or school, downsizing is what matters more than protecting that low rate. And when the owners do decide to move, they are not dabbling. They're solving for something specific. They want more space, less space, a different school district, shorter commute, a neighborhood that maybe fits their life better. That's also why the best presented, correctly priced listings still do really well. They are the obvious answer for buyers who have already done the math and decided the move is worth it. So put all of this together, and here's what the Los Angeles market actually feels like right now. Steady prices with minor year-over-year movement, not a big swing up or down, a clear split between strong single-family demand and slower, more negotiable condo inventory, more normal days on market that give buyers a little bit of time to think, and a rate environment that keeps some people on the sidelines, but pushes others to make very considered, lifestyle-driven moves. Looking ahead, most forecasts point to flat to low single-digit changes over the next year. Not much activity. Think roughly 0 to 1 or 2% increase, if that. And it really just depends on the neighborhood and the price point. We're likely going to see a bit more inventory as more owners accept that mid 6% rates may be with us for a while, and buyer activity should stay solid, but choosy. So this is not another setup for a 2021 style frenzy. It's a market where strategy really matters. If you're sitting on a great interest rate and a good amount of equity and you're torn between staying put, remodeling, or making a move, this is exactly the kind of problem that I help people solve. If you reach out, I'll put together a simple move, stay, hold playbook for your situation focused on your neighborhood, your price point, and your mortgage, and most importantly, your lifestyle. We'll actually look at what it really costs to move now, what it looks like to improve what you already own, if that's an option, and what it means if you stay put and let the market do its thing. Think of it as a quick pocket strategy session plus a rate lock reality check. The goal isn't just talk about buying or selling, it's to get you out of limbo and get you into a clear plan, even if that plan is, hey, let's wait 12 to 24 months. And if you want to keep getting the level of detail on what's happening in the Los Angeles market instead of just reading headlines, those are scary, then make sure you subscribe to Keri TV so you don't have to decode the market on your own. That's not fun. Or come see us at 1207 Montana in Santa Monica.